Hi everyone, welcome to Natural Rubber Market Outlook. Today we are in episode number 29 of the Natural Rubber Market Outlook produced by the Technobis. So let us have a review of what happened in the previous week. So today I would like to present the various factors which have been influencing the prices over the past week. So in fact, NR futures have been range bound during last week. Range bound in the sense it was moving sideways and maybe a little bit bearish, but it was actually moving around a central line during last week, which was our prediction in the previous episode. So in fact, market sentiments is currently dominated by the geopolitical tension following the visit made by the US House of Representatives Speaker Pelosi to Taiwan, in spite of warnings by China. So, inner demand outlook got challenged because after China fired multiple missiles around Taiwan, maybe around Wednesday or Thursday, and that escalated tension and worsened sentiment towards Asia's largest economies, which are major NR consuming countries as well. So what we can conclude that last week, the geopolitical developments indirectly impacted the demand outlook for natural rubber. This was one thing happened. And also last week we have seen interest rate, the continuation of interest rate hike by central banks across countries. And latest in the row, Bank of England raised the interest rate and signals more measures to combat the inflation. And also we have last week we have heard central bank officials, sorry, not US central banks, means the Federal Reserve officials signaling further aggressive policy interest rate hike in its subsequent meetings of the FOMC, Federal Open Market Committee. So that means last week we had a mix of factors, negative factors. One is impacting on the global demand outlook for natural rubber, especially the demand for natural rubber from Asia's major economies, including China and some of the Southeast Asian countries, and also a rate hike by central banks, and also signaling by central banks for further aggressive policy rate hike in the subsequent meeting. So we will continue. We have some more factors which have impacted the market sentiment during last week. So last week, we have also seen dollar, safe haven dollar, gaining strength, and we have also seen dollar not only gain strength, but there was a feeling that dollar is going to gain further strength due to two reasons. One is a dollar is a safe haven currency. Whenever there is an uncertainty or geopolitical risk, whenever there is a economic uncertainty or geopolitical risk, usually speculative investors will switch over from risky asset classes to dollar. So it's called a safe haven currency. So the geopolitical tension in between China and Taiwan made the stronger dollar because of its status as a safe haven currency, and also dollar gained from the statement by these Federal Reserve officials that there would be further aggressive policy rate hikes in the subsequent meetings of the Open Market Committee, Federal Open Market Committee. So dollar became strong, means speculative investors will be less active in risky asset classes, including commodity futures, because a stronger dollar makes return on investment less attractive. And at the same time, we have seen crude oil prices tumbling largely on demand concerns. Demand concerns due to various reasons. One reason, demand concern due to the global economic, the recession risk. The other is the demand concern is caused by the China-Taiwan tension, because the geopolitical issue between the two countries can have a negative impact on Asia's largest economies, and that would be impacting on the crude oil, the demand for fuel, energy demand also. So these were the various factors, negative factors, which have influenced the natural rubber market last week, and all these factors are still remaining. That means we have a mix of, we have a combination of negative factors impacting on the market sentiment and keeping speculative investors away from rubber futures. At the same time, we have a number of positive factors. Let us see what are the various positive factors. First of all, there are some kind of a supply disruption in the global supply of natural rubber, disruption in the global supply of natural rubber. NR production, natural rubber production in China, in Thailand is disrupted by rains. And also India, although India is not a major rubber producing country, production in India is disrupted by rains and floods in several parts of Kerala states, which is accounting nearly 70% of the country's total natural rubber production. And another positive news came from US. Last Friday, US Labor Department released the jobs data. US means how many jobs, non-farm jobs they added. So in fact, actually, US economy added 528,000 jobs during July. This is this figure is near more than double the expectation, what was expected by the markets. In fact, the market was expecting an increase of a new job creation of around 250,000 jobs during July, but actually it was 528,000, means more than double. So this is actually because of this much additional job creation, US labor market has now returned to the pre-pandemic level. So the pandemic has made many people jobless, but now the job market has come back to the pre-pandemic level. This is a major positive news to the US economy. So that means because of the US labor market's jobs data, the US economy, it is almost sure that US economy is not falling into recession. That means we have a positive news from the US economy. US economy, which is the largest economy in the world, is not falling into recession, is a major positive news, not only to the global economy, but at the same time to the global demand outlook for natural rubber. Major news. Then another important news, imports of natural rubber in the US jumped 13% during the first 7 months of this year compared to the previous same period in the previous year. A 13% increase in the natural rubber imports in the US is also supporting the view that the manufacturing activities have come back, and the US is actually, the demand outlook for natural rubber is better than what we have expected earlier. So we have a set of negative factors and also a set of positive factors. Let us now see how the market is going to perform in the coming days. We should admit that uncertainties are there. We have uncertainties due to geopolitics, and we have the uncertainties caused by the global economic recession risk, and also uncertainties caused by the further rate hike by the central banks, and but that means working capital is going to be more expensive, or a return on investment is going to be less attractive. And we have the stronger dollar, which is again a negative news to the markets. and also the falling crude oil, which is not good for the commodity market, because crude oil has a major weight, it has a major it enjoys a major weight in the commodity basket. So whenever crude oil price comes down, the commodity index normally will come down. So that means falling crude oil can have a negative bearing on the commodity market. That means the speculative investors will be less active in commodities when oil is falling down. So these are some of the negative factors which are going to impact on the markets in the coming week or in the short term. But we have positive news from the US, because US economic recession fear has been substantially eased by the July jobs data. 528,000 jobs newly added means more than double the market expectation. It's a major positive news. So in the coming week, prices are expected to gain strength, largely helped by the positive news from the US economy. So the US jobs data came out Friday evening in the Asian time. So its positive impacts we can see when the market opens Monday morning. So that means this is a major news, positive news to the markets. But gains will be limited because of the various uncertainties and risks listed above. So we have a major positive news, that's a good news. So we are expecting a gain in the market, but the gains will be limited due to the limiting factors in the form of uncertainties and risks. That's all about the market outlook for this week. We will see you again next week at the same time. Thank you.